Hello and welcome back, everyone. Today, we'll be presenting the second part of the analysis of Taj Hotels and the results that came out for Taj Hotels for Q4 of 2024. In the first part, we had discussed a lot about the overview of the business, some of the financial highlights, the segment growth, the breakup of the segment, how the business is divided into the various segments that there were. The idea was to divide the investor presentation into two parts, 30 pages. So because the investor presentation is 60 pages in total, so we thought of dividing it into 30 pages for the first part and 30 pages for the second part. We also discussed the performance highlights of the business, the city-wide statistics, what some of the international hotels, the way they're performing. Today we'll be discussing a lot about how the big hotels or the big machine performance, the one that we have right on the screen at the moment. We'll also be dwelling deeper into the numbers for Ginger and how the Ginger business is doing. Um, um, and also we'll then move on to the homestay, Ama and Qmin. Qmin is one of the interesting pieces of business embedded within this company, the umbrella group Indian Hotel Company Limited. So Qmin really originated in the sense that if Taj wanted, it could collaborate with Zomato and Swiggy, which hold like 95% of the market share. But what it really thought that instead of paying out commissions to these companies, it wanted to have everything under its own control. And hence, this is where the idea of Qmin originated. They wanted the highest standards of health and hygiene, and they wanted to maintain the standards in terms of delivery. So the delivery is not as quick as Zomato and Swiggy, but it has an average timing of delivery of 90 minutes. And it does more of like gourmet and some of the higher luxury deliveries that are out there. So that is one of the most interesting businesses within embedded within the Indian Hotel Company Limited. The Roots Corporation is one of the subsidiary of Indian Hotel Company Limited, and Taj recently sold the Qmin business, which is primarily dominant in the Ginger hotels. It also has food trucks, and it also does corporate event catering and those kind of things. So that has been now sold off to um, the Roots Corporation, which again is um, the subsidiary of Indian Hotel Company Limited itself. We'll also be talking about the performance of Taj SATS. We discussed that how the growth in aviation and the fact that Indigo and Air India in totality last year had ordered a world record breaking number of aircrafts. It had ordered close to 970 combined aircrafts, which the world had unheard of, and which had placed a lot of order book in the hands of Airbus and Boeing, and got the aviation sector really excited about the orders. So Taj SATS and the correlation of the business with the airline business is something which will be interesting to really keep an eye on. We'll also be discussing some of the key growth enablers, about how spiritual tourism is really taking its place. And spiritual tourism is kind of like recession free, because you have sorrow or you have happiness, you will be visiting the pilgrimage. And Ayodhya, after the addition of Ayodhya and some of the other places, Rishikesh and Haridwar and so Meerut and all these kind of places. So Taj is really building up on the presence and realizes the importance of building up presence within these centers. The management has also guided that because Ayodhya is of such big prominence for the Hindu community, it would be bringing all its value chain, right from the upper segment to the lower segment businesses into Ayodhya and some of the other spiritual tourism places. We'll also be discussing some of the segment stat, planned hotel openings. So when I'll be discussing the planned hotel openings, you'll see that a good number of hotels um, are being managed by management contracts and not by owned by Taj Hotel. And really the idea is that in the next 4-5 years, the next 100 hotels that open, 72 out of those hundreds will be under the management contracts, and then it would utilize its free cash flow to really shore up not only renovation and gain competitive advantage, but also to construct from scratch and utilize some of the land banks that it has. So here, what we can see is we see the key businesses that are really contributing to the overall revenue. The iconic Taj Mahal Palace, which was the flagship hotel, really, and it's contributing close to 700 crore. The St. James Court is also one of the bigger contributors. It's contributing close to what Taj Lands End is contributing out of London. Um, uh, and the EBITDA is also around close to 130 CR. So these numbers are right now represented in GBP million. And here what we see is that it's the third highest contributor, the St. James Court, or tied to second with Taj Lands End, really. Taj Mahal New Delhi, the numbers are kind of muted here. As you can see, there's given a hashtag saying that the hotel was under renovation, and also the fact that there was license fee, despite the increase in license fee to 32.5%. Now, the mention of license fee really got me curious, and I dug a little deeper to bring an insight into this. So this hotel has been bought on a license agreement with the New Delhi Municipal Corporation, and Taj is really paying through the nose for this iconic property, because some of the other properties that are in and around Lalit and some of the luxury hotels that are in and around Taj Mahal at Mansingh Road in Delhi, the areas are much bigger, and even those are licensed from the New Delhi Municipal Corporation, but they're not paying as big a license fee than what Taj is. But despite that, what they mentioned is that it was able to have a positive profit before tax in FY24 in spite of the renovation and in spite of the increase in license fees. So quickly jumping on to how Ginger is doing and what Ginger numbers look like. So currently Ginger is also divided into two segments. One is the budget Ginger, which we would see in some of the smaller tier cities like Guwahati, and those gingers are on the smaller side, and those are not on the lean lux side. But really, they're looking at the premiumization trend, and what they've said is that due to the premiumization trend and to really derive benefit out of the assets that they are holding in the ginger segment, they want 2/3 of the segment to be in the lean lux category. They did a total of 486 crore revenue this year in total from the ginger segment, and also the management really said that the margins on the ginger segment is very high compared to the rest, where the rest of the margins are sitting at profit margins are sitting at close to 23%. But the ginger segment in itself on the higher above 45% segment. So the blended percentage of ginger within the entire portfolio is low. But Ginger being an asset light model within the embedded IHCL umbrella, the increase in Ginger should bode well for the business because it has a higher margin compared to the iconic Taj that is there. So Ama and Qmin again. So Ama stays in trails, and some of the properties. If this trend of staycation and all these kinds are really beginning to pick up, and if you do analyze some of the homestays in and around the city, some of the unique homestays are really beginning to arise, like homestays made out of bamboos, totally bamboo construction, and those are selling for 35,000 rupees a night. So Bali really has some of the bamboo construction in prominent ways, but Taj is also tying up with some of the entrepreneurs which are really beginning to construct out of bamboo and lease it out to Taj. And Taj is adding it to its portfolio. And what we can see here is that March 20, the operational and the pipeline in totality was around 20 units. But right now, the portfolio would be 200, whereas 100 is operational and 100, the rest 50% will be in the pipeline. So that's a good sign. And again, here we have the Qmin business. Qmin business is, we can say, a like to like. If you had to compare it to some of the business which are listed, you can compare it to Zomato, but with a twist, because Taj really wanted hygiene to be on the on on the top of its priority. It came out with its own ecosystem without giving it to Zomato and Swiggy, really, because it wanted to maintain hygiene and also do its utilize its own resources to deliver and derive value out of it. So here we have seen that the business that was incepted and the growth that there is in the business. There have been a 73% growth over previous years. So again, Taj SATS, Taj and SATS is another independent company, and if I'm not wrong, it's an American company, but I'll do have to recheck that. And it's a joint venture between Taj and SATS. And what we see here that definitely there's been an uptick, so 40% year-on-year increase, and it's contributing 900 crore of business into the IHCL umbrella. With an EBITDA of 230 crore, which has seen an 82% year-on-year growth. And the fact that there's definitely been some push from the government as well. There's been the Udan scheme, where more and more new airports are coming out. There are airports beginning to really take shape in some of the regions where airports were not at all present, and some of the smaller cities also are now beginning to build airports. Andaman and Nicobar recently had Plush Airport being built to push tourism. Lakshadweep, definitely the airport is in progress, and a more structured airport will be in place to push that business as well. So a lot of airports are being built, a lot of aircrafts are being brought, and if you really had to play in one of the airline stocks, Indigo and the likes, we've seen what has happened to the stocks of SpiceJet and the likes. There hasn't been any stock which in solitary does airport management, which I feel is a much superior business compared to running an airlines, because airport management business, it collects everything from hangar revenues, and on the even within the tickets, there's a percentage which goes to the airport management and business, and that's the reason Adani is gung ho about the airport management business and been buying out airport management across from tier 2 cities like Jaipur and Guwahati. And it's bought a whole plethora of businesses that there are. Some of the other players that there are is GMR. GMR was one of the is handling the Delhi and the Hyderabad airport. Fairfax, that is the Prem Vatsa Group, is holding the Bangalore airport, and Adani, as we know, has taken over the Mumbai airport from GVK and added it to its own portfolio. We'll quickly move on to the quick key growth enablers and what are the long-term demand drivers for the business. We had discussed yesterday the rise of conference tourism, and how building of some of the convention centers, and India really wants to host some of the biggest events. It is also vying for the 2036 Olympic, and I think we'll have to wait and watch whether that would be a success. But even without the Olympics, because of the median age of the country being at the 28-29 threshold, and the middle income households, as we can see, is increasing within the first graph. A lot more weddings will be happening through the Taj Group, through some of the luxury segments, luxury hotels, and even so that'll aid to the business. And because India is a young country, that should aid a decadal growth for the business. And here, as I was mentioning and harping about the airports, about how the airport numbers are increasing, so from 49 to 250. So that is increasing. There has been a trend change in staycations and pleasures, the business by entrepreneurs, not really to go traveling to do just business, but to combine business and pleasure. And as the CEO of Taj Hotel really likes to call it, pleasure. So that is on a rising trend. So there's been a permanent shift as well in some of the trends in terms of the infrastructure. There's been an infrastructure push, and here, as we can see, that within 2023 we have 145,000 kilometer of built up national highways, which is projected to rise to 200 to 230,000 levels. The rise of bullet trains, the faster trains, and some of these segments are really going to aid to the business. And some of the big marquee events like the World Cup, or we are having so the conferences, and even I was looking at some of the numbers that the CEO was mentioning. So he mentioned that the number of global CEOs that they have had in the last year is more than what they've had from 2020 to 2017, 3 years combined. So the numbers are phenomenal. And business is really moving after COVID. Although the level of tourism and the level of arrivals into India haven't gone back to pre-COVID levels. But with that going back to pre-COVID levels, they should really aid in the growth in revenue and the business. Here we can see a graph on premiumization trend. What they mentioned is they've mentioned that within 2020, there were 4 million shipments of iPhone, but which has more than doubled. So if you look at it as a 3-year projection, for it to double, it would have grown by 26% CAGR, but it has beaten even the 26%. So it is 26% plus CAGR to be sitting at 10 million iPhone shipments. So this is definitely hinting towards something. This is pure data, and this is just not a gut instinct. And within the notes, they've also mentioned some of the government initiatives that have been there. So one is the Wed in India. That is one scheme that has been floated by the government. And there are also new circuits which have developed. So Ayodhya is expecting 100 million tourists, and destinations like Lakshadweep and Prasad scheme also, Prasad scheme being the spiritual tourism circuit development. So these are some of the kind of numbers. Maldives has really taken a hit on the business. So majority of the Maldives arrivals were within the Taj property were by Indians, and because of the recent geopolitical tension, the Maldives number has taken a hit. And in spite of that muted numbers, we are seeing the results that we are seeing. So and because of that, the price to earnings ratio is sitting close to 63, 64%, 64 price to earning multiple, which I believe is high. But then again, I think it's for the audience and the viewers to analyze and do their own research, and also process the information that I'm sending out to really make a assessment as to whether that's an expensive PE multiple or it can be afforded and it's a low risk PE multiple. So we'll quickly move on to the planned hotel openings. I just wanted to show what are some of the hotel openings that are planned in the next 6 months. And here, what the interesting part to see is that these hotels are being opened. So here we have a list of 13 hotels which are being opened. There's one in Puri, in Coimbatore, and Mahabaleshwar, Srinagar, Bekal, in Kerala, and those kind of all of these, except the Ginger brand, which is capital light, is all management contracts. And what you see here, Ginger Shastri Circle Udaipur is IHCL owned, Ginger Nagpur is IHCL owned, and Ginger Jamshedpur is IHCL owned. And the remaining rest, lo and behold, all the numbers that we were discussing about moving 72% of the business, the new hotel opening to management contract is really beginning to see and play out here. We also need to understand that currently, when we think of Taj, we think of rooms and the revenue generated from rooms. But we also need to understand that when we looked at the first part, we did realize that rooms is contributing close to 49% of the business and 49% of the revenue. Food and beverage is contributing to 34%. Management fee is contributing to 7%, and with the change in business mix, we will see that the management contracts will rise and the management fees will rise, whereas the expenses should go on declining. So it'll make for a useful case to study the future guidance by the management, future numbers by the management. We shouldn't be really taking everything that the management says. We should also invert, and we should think about some of the risks that the business may face. We've had a COVID where the COVID has had significant impact on the business. What are the likelihood of another COVID not happening? It can happen. We are also seeing a rising interest in India and investments into India. We have seen that Accor Hotels and Wyndham Hotels have announced big plans in India. That should really push Taj on its toes to really keep its service standards high, because we know that some of the European and the US markets, what they are good at, Indian companies are definitely, Indian hospitality is definitely superior. But what the US and the European companies are good at, they are good at efficiencies, managing with less resources, and expensive resources are more skilled. So to maintain the skill levels and to maintain the service levels, given the fact that there are so many segments that are there and from all value chains, the luxury and low luxury, but ultimately everything will go down to how the service levels are going. The service levels need to be really high. One thing I don't like about the business is its high dependency on human capital. And whatever you may say about AI and uh, all technology and everything, I still feel that there will be human dependency in the short run. So that is something I don't like. I feel the price to earnings is a little higher for my liking. And what I believe, and it's my personal opinion, and I'm not a SEBI registered analyst, is that this can be a good compounder, but this would be not a good alpha generator in my opinion. So it can generate close to 15% CAGR. But what we have seen that in the last 3 years, this business has generated close to 74% CAGR returns. So just to put that into perspective, if a business gives you 72% CAGR for the last 3 years, that means the business has grown 6x in the last 3 years, because 72% would double the money every year. So 1 to 2, 2 to 4, and 4 to 8. Sorry, it would be 8 times. So the prices have really gone up 8 times, and some of the smart investors who were really invested was the late Rakesh Jhunjhunwala, who has grown his wealth 8 times being invested in this business. I'm not too sure whether he was invested since the last 3 years, but he definitely has an holding. Now that holding has been shifted in the name of Ms. Rekha Jhunjhunwala, his wife. And also there are holdings from some prominent FIIs that are there. So I would conclude my analysis on this. I would leave the link to the description of the first part, the link to the link within the description below to the first part. You can have a look at it, and also look at the second part in totality to get a holistic view of what the business looks like, what are some of the risks within the business, and how the numbers look like to you. You can definitely tell me some things about the analysis you liked, or you can also hit the dislike button if you want. You can be really honest about what you think about the analysis. I would end it here, and I hope you have a lovely day ahead. Thank you.